The central bank's cut in the reserve requirement ratio this month follows two other similar moves in January and April. All are aimed at supporting the growth of small and medium-sized companies. The bank funds freed up by the reduction are to be passed on to the smaller companies in the form of business loans. Smaller companies always have a large demand for loans, and it's not always easy for commercial banks to decide whether to lend to them, as they can frequently have weaker financial backgrounds. The targeted cut in the reserve requirement ratio is expected to make it easier for smaller companies to get the cash they need.
It's actually a motivation mechanism. Commercial banks will have a bigger motive to serve more SMEs. Earnings of the SMEs may not be very high, so it's risky to lend money to them. But they will have easier access to loans after the reduction in the reserve requirement takes effect.
99% of all companies in the country are classified as small or medium-sized, so the reduction is also expected to add a dose of energy to the jobs market. The Ministry of Industry and Information Technology has pledged to improve the employment environment in small and medium-sized companies by 2020. It's hoped that by then, Chinese SMEs will provide 8 million new jobs every year.
The small business need banks loans to support their businesses because their bank loans have a lower cost than the other ways of funding. If they can get more loans, because the small entrepreneurs always have more productivity and more profitability. So if they can have cheap loans, it will be easier for them to expand their business, so they will hire more person.
A survey by the People's Bank of China shows the demand for loans by SMEs in the first quarter of the year increased by 4% as compared with last year, which brought it to a 3-year high. With increasing demand for loans, experts expect more monetary policies to come to help SMEs in the second half of the year. Chen Tong, ICS for CGTN, Shanghai.